Facebook to go live. Good afternoon and welcome to Webinar Thursday. My name is Mary Jo Williams and I will be your facilitator moderator for this afternoon's session. And our presenter today is Ms. Carmen Acevedo Adams. But before we start with today's bookkeeping session, let me share a little bit of information with you about the Virgin Islands Small Business Development Center.
Has your business been affected by COVID-19? The Virgin Islands Small Business Development Center is available to assist entrepreneurs and small businesses in the U.S. Virgin Islands. The VISBDC is sustained by the University of the Virgin Islands and the U.S. Small Business Administration and collaborates with local agencies to support the small business community. The VISBDC is nationally accredited and provides free consulting, business education training, and technical assistance. Attend workshops with subject matter experts from both the public and private sector. From idea generation to exit strategies, the staff at the VISBDC is ready to assist you. Now is the time to contact them, so don't wait. Call or email them to find out how they can help your business grow and succeed.
¿Su negocio ha sido afectado por COVID-19? El Centro de Desarrollo de Pequeñas Empresas está disponible para ayudar a los empresarios en las Islas Vírgenes de los Estados Unidos. El VISBDC es sostenido por la Universidad de las Islas Vírgenes y la Administración de Pequeñas Empresas de los Estados Unidos para apoyar a la comunidad de negocios pequeños. El VISBDC está acreditado a nivel nacional y ofrece consultoría gratuita, educación empresarial y asistencia técnica. Asiste a talleres con expertos en la materia, tanto del sector público como del privado, desde generaciones de ideas hasta estrategia de salida. El personal del VISBDC está listo para ayudarlo. Ahora es el momento de contactarlos si necesita ayuda. Llame o envíe un correo electrónico para averiguar cómo puede ayudar a que su negocio crezca y tenga éxito.
Okay, and I'm going to turn control of the session over to Ms. Carmen Acevedo Adams. And Ms. Adams has worked for over 25 years as a bookkeeper. Her clients range from restaurant owners, contractors, EDC companies, nonprofits, and homeowners associations. As a full-charge bookkeeper, she has worked on accounts receivables, accounts payables, payroll taxes, monthly, quarterly, and yearly and local federal tax reports, posting of daily sales, bank reconciliations, and general journal entries. In 2016, Ms. Acevedo Adams started her own business as a full-charge bookkeeper. She currently works as an independent contractor for the VI Small Business Development Center, as well as an English-Spanish, Spanish-English interpreter with local attorneys and other businesses. She loves what she is doing and truly enjoys helping people understand the importance of good record keeping for their financial well-being and for their businesses. Ms. Carmen Acevedo Adams, the floor is yours.
Sorry. Thank you, Mary Jo. Good afternoon, everyone. Happy to have you here with us. Today is the last of our webinar Basic Bookkeeping series. We're going to be discussing financial planning, budgeting and control, auditing, and doing a quick wrap up. But before we get started, we always like to get to know our audience a little bit better. So we're going to post 2 poll questions, I believe. Mary Jo?
There's the question. For those of you that are on Facebook, you cannot see the question, but the question is, do you have any accounting knowledge? And we will give you a couple of seconds to answer, and the possible answers for those of you on Facebook, yes or no. And this gives her an idea of where to go with her presentation. And I'm going to end the poll now. and share the results. And of those that answered the poll, 60% have some accounting knowledge and 40% do not.
Okay, good to know. And then how many are you in business?
Are you in business? And we're launching that poll. Either yes, you are in business, or no, you're not in business. And we'll give you a couple more seconds to answer that poll. All righty, I'm ending the poll now. 63% of our audience that's answering the question is not in business, and 38% are in business. That's a little bit more than 100%, but
okay. Okay, that's interesting. 63% not in business. Okay. So financial planning, budgeting, and control auditing, and then wrapping up. We're going to talk about that. As always, feel free, please, if you have any questions about anything that is being discussed, just put them in the chat and Mary Jo would alert me to them. Always happy to hear your questions, your comments, and later on, I'm even going to ask for a few comments on your part concerning the whole series, okay? Also remember, this is the 5th of the series. The others are right now in the SBDC YouTube website and also in Facebook. If you want to go back to any that you may have missed, or as a refresher, you have they're available for you to do that. So it would be good that every once in a while you can do that, and also share them with others that you think might benefit from the information. So financial planning, budgeting, and control. For many of us who have tried to use a budget at home to curtail that internet shopping obsession, guilty. You have either discovered how difficult it is to stay within a budget, or how much easier it is to stay within your means when you use a budget. So budget is extremely important. Now, originally this series, it was meant for business owners, but it really applies to anyone. Whether you have a business, or you are thinking of getting a business, or you are working for someone that has a business, budgeting is something that is important to know, okay? A budget tells us what we can't afford, but it doesn't keep you from buying it. So a budget is going to allow you to make wise decisions as to when you can buy something and whether you should buy it at all. Reasons for budgeting. You need to have a plan of action. It gives you a good plan of action. It allows you to set financial goals, and it allows you to evaluate your performance throughout any specific time period. You choose that time period. Usually it's done at the end of a year, whether it's a financial year, a fiscal year, or a calendar year. Budget definition is a detailed plan of action, with dollar amounts. Examples of budgets used in businesses include the cash budget, a sales budget, production budget, department budgets, the master budget, and the capital expenditures budget. So you can see that one business can have more than one budget set up. And basically every department there is a budget has been set up. And we're gonna see why this is a smart way to go. Some budgets are designed to be flexible budgets, while others are static. Flexible, that can bend to the circumstances, can adapt, and static are set in stone, so almost. It's unbendable, won't bend at all, regardless of the circumstances. There's pros and cons to every one of these budgets, but we're gonna see that the flexible budget, of course, is the one that is the most, the easier to use, and probably give you better use for your budget, for what you've done. The time spent on it is going to give you more information, and it's going to be more helpful to your business. So a budget is a financial plan for future activities. The budgets that are used in businesses often include a sales or revenues budget detailed by products or services, production budgets, budgets for each department in the company, a cash budget, And this is an interesting concept, a cash budget. We know that in St. Croix, many businesses are on, well, maybe I should say the Virgin Islands, not just St. Croix, are on cash only. And maybe that's how also they not only accept the income, but also pay their expenditures. And so you definitely want to have a budget that is going to kind of guide you as a ruler where that is concerned. Cash is very easy to flow. Capital expenditures budget and others. The combination of all these budgets is referred to as a company's master budget or profit plan. Budgets help management decide which activities it will undertake and how the company's resources will be used. There is a quote from Elizabeth Warren that I really liked. And basically she's talking about a balanced money formula, in other words, a budget. She says, spend 50% of your earnings on needs, spend 30% on any wants you may have, allocate the remaining 20% of your income for savings or debt reduction. So this is, if you listen to it, it sounds like, okay, that's for a personal budget, but it also applies for a business budget. So when you are, especially if you are starting as a business, you want to have a budget for your business. You want to plan ahead how the monies that are hopefully coming in are going to be expensed out, and how the difference, hopefully on the plus side, is going to be used for the improvement of your business. Okay, you don't want to leave that to chance. This is something you want to plan on. You cannot plan on the earnings because you have no full control over that, but you can plan on what to do when they come in. And by doing periodical budgets, by going over this information on a, especially as a starter, as a startup business, you want to do it often. Then you can, if a flexible budget, then you can tweak it as it needs to be tweaked so that you always are ahead of the game. You're not behind the 8 ball, like they say, okay? If the budgeted income statement and balance sheet coming out of the master budget are not acceptable, management can then make the needed changes before the year actually begins. So you need an income statement and a balance sheet. We're gonna go, in another slide, we're gonna see what are some of the things that you need to have to do an actual budget, okay? Budgets can assist in controlling the actual cost because managers realize that the cost of their activities will be compared to their budget. So if you have a business that has different departments and you have department heads over those departments, you definitely want to share that budget with them, and you want to sit down with them and you want to let them know this is what we are hoping to see 3 months from now, 6 months from now, 1 year from now. And then they in turn would know that they have to try to achieve that budget. So their work is measured with that budget, which is good. And they will try to do their best because they know that they are responsible to you. Budgets can also assist in controlling the actual cost. Oh, I'm sorry, I read that, because managers realize that the cost of their activities will be compared to the budget. So especially when you have department heads and they have certain allowed expenses or expense accounts, then, you know, this is something you want to keep tight on the budget, okay? You want to see how those expense accounts are being used and whether they are maximized to the benefit of the company, not necessarily the benefit of the department head. The differences between the actual amounts occurring and the budgeted amounts are known as variances. And that there's always, I don't think there has ever been a budget that has actually been done and it's exactly like that at the end of the budgeted period. I don't think that's ever happened. So you're always going to have variances. These variances can also signal some new problems that need management's attention. So that's why one of the many reasons why having a budget is important. Creating a budget. Okay, I'm trying to, there we go. Gather all your financial statements. So you're going to get your income statement, your P&L. for whatever, remember, a budget can be created for any specific amount of time. So you can do it for a month. You can do it 1 month at a time. You can do it 1 week at a time, depending on what the needs of your company is. But you want to have financial statements from before. Okay, so how was it done before? What do we need to change? And then what are we going to be budgeting for in the future so that it can be done correctly if there was anything that was not done correctly before. You want to list all your income sources. You then want to create a list of your expenses. And then you want to determine which ones of these expenses are fixed and which ones are variable. Fixed expenses, things that you pay always the same thing every month. Your rent, you should be paying the same thing every month. Maybe a car payment. You took a loan for an automobile for the company, the truck, whatever. That's a fixed expense. So you know that those are things that you know that same amount is going to be coming out every month. But then you have variable expenses. You have expenses like utility. Utility in the Virgin Islands, unfortunately, is very variable. Every month is going to be something different, and sometimes very different from the previous months. So you want to be on top of that. Then you have, say, your internet. Maybe you have advertising budget, and that can also be different depending on the needs of the company at the time. Total monthly income and expenses, and then you make adjustments as needed. So let's talk a little bit more about that total income, monthly income and expenses. You want to compare your budget to your actual expenses. This is what we have budgeted. And this, at the end of that period that we budgeted for, then we do another financial statement, and then we see how they compare. This is what we budgeted. This is what was actually spent. This is what we felt was going to come in. This is what actually came in. They should be reviewed and it should be updated, and it's going to help you improve in your future budgets, and therefore it's going to also assist you in make better decision making for your company. The success of every budget comes down to one simple question: are you spending less than what you're earning? That would be the ideal. But many times, especially for companies that are startups, sometimes you're going to be spending more than what you're actually earning. So this is where you want to know when that is happening. If you are a company that are with the seasons, with tourist season, summer is a slow time for you, a budget is going to help you to allocate funds wisely so that for those dry months, you're going to be able to continue with your business and it won't hurt you so much. Creating a budget can be intimidating at first, but keeping this principle in mind can help you to take control of your spending. Let's see what that is. You're going to define your budget objectives. Okay, what is it? What am I trying to find out? Which part of the way that my money is being used do I want to find out exactly how it's being used? It could be a department only of your business, or it could be the entire organization. Then you want to access historical and actual data, and this is by means of your financial statements, okay? Then you want to develop a base budget. Let's start with the most fundamental. And then as you access that data that is giving you the information of how it was done before, then you're going to start preparing the budget. Then you're going to look at that and say, wow, we spent $5,000 on advertising for a 3-month period. How much business did that advertising actually gave us? And when you look at how much income came from that advertising, you can determine, wow, that was good. Maybe we want to do it again. Or you can say that was not very good money, not well spent, because we didn't have that much more coming in. So you need to look at variables. You need to look at, maybe was it the company that was used or the way the advertising was done, or Could it be that at the time of the year the advertising was on? So you see how budgeting and having those actual figures in front of you can help you to make good decisions. You want to review that budget, and then you want to post and report those results. Again, if you have departments that you're watching, you want to have that meeting with those department heads, and you want to go over that budget with them and the actual results. And you want to have those conversations. What should have been done different? Why do you think this happened? Or, wow, great, wonderful, kudos. How can we repeat it? So those are the kind of things that creating a clear and actual budget is going to help you to do. And then, of course, you want to continue monitoring your progress, and you want to amend, because there are variables constantly happening. You want to continue amending that budget. And as you grow in your business, and as you, if you're a startup, you start getting your feet, solid feet, you start learning your public, who are the customers, how they buy, how they react to the different things that you're doing. It's going to be easier for you to know how often then to do a budget. Any questions so far? No? Good. Okay, so let's talk about fixed versus flexible budget. A fixed budget is a budget that does not change or flex for increases or decreases in volume. And here volume could be sales, could be unit produced, or any other activity that you are trying to analyze. A fixed budget is also known as a static budget. To illustrate a fixed budget, let's assume that a company pays a 5% sales commission on all of its sales. If the company prepares a fixed budget and it's projecting sales of $1 million, the budget then for sales commission is going to be fixed at $50,000. However, if the actual sales end up being only $900,000 and it's a fixed budget, the budget for sales commission is going to remain changed at the fixed amount of $50,000. Not good. If the actual sales are $1,100,000, the budget for sales commission will also be $50,000. So not good on the part of those who did the work. So you see how a fixed budget has its drawbacks. However, a flexible budget is a budget that adjusts or flexes with changes in volume or with activity. The flexible budget is more sophisticated and useful than a static budget. The static budget amounts do not change. They remain unchanged from the amounts established at the time that the static budget was prepared and approved. And that has its place. Again, it all depends on your particular business. Everything that we are learning has to be tailored to your business. Not compared to somebody else's business. No, you tailor it to your business. You know what your business is about. You have to tailor it to your business. Using that same example of the that was used for the flexible static budget. If the sales commission would be expressed at 5% of sales, then this means that the budget for sales commission would be $50,000 only when sales are $1 million. If the company actually has sales of only $900,000, the budget for sales commission is going to flex with that, and it's going to be 45. It's going to reflect that change, and it would be only $45,000, which is equals 5% of 900,000. If the actual sales are 1,100,000, then the budget will also flex in the other direction, and it will be increased to become $55,000. So you see how fixed or static versus a flexible budget can work for or against you. So static and flexible budgets, one is not adjusted for actual level of production. The flexible budget is one that can be adjusted to various activity levels. If you're starting out, my recommendation is a flexible budget. Use a flexible budget. If you really want to see and have the percentages that are going to reflect what actually is happening with your company, you use a flexible budget. Again, you decide. It's your company. You decide. But a flexible budget, you can see how it can give you more accurate information and produce better results as well. So let's review a little bit of what we just talked about. What can budgets project? They can project the cash inflow and outflow of your business. They can also project other items that are on the balance sheet as well, not just the cash in and out. It can project what kind of expenses, how much are you spending on those expenses, how is your income, well, there's a cash flow, how is it coming in? If you do it periodically, like every quarter, then you start getting a feel for when is a good time for your particular business, when is the good time, the good season for it, and that can help you make decisions as to, I advertise more, I bring more merchandise, I start being out there more. So that having that budget and knowing what's happening with your business is gonna, like I always say, help you to make better decisions. What can a budget help a business control? Not much other than the spending. Okay, I apologize. Understanding what comes into the business as well as what must go out can give the business a clear financial picture, which can help avoid overspending. If you're a seasonal business, then you don't want to put all that into it at when you want to know when you put all that into it, when you do all the advertising, when you hire 3, 4, 5 more people because you know that you're going to need them. If it's a slow season, you don't want to have 10 people doing nothing. You want to have the people that are going to help you to keep the business going. And then, you know, because you're a seasonal business, then you would hire them when you need them once again. So these are the things that you want to be able to know beforehand. And you know this when you have a budget, once that budget is set, then you review it at the end of whatever time period you have specified, and then you can make better decisions. What is the best reference when creating a budget? Your company's past financial statements. How was it done before and what were the results of how it was done? Only the information of the company in question is relevant to the budget, not somebody else's information, not what your employees tell you, even though that can be beneficial. I mean, it's good input because they're the ones out on the floor, but they're not, it should not be based solely on what you hear say. It should be based on black and white numbers, okay? What should be done if income equals more than the expenses? Hey, save it. It should be saved and used for future events when your expenses could exceed the income. Again, if you're a seasonal business, then you will have your dry months, you will have your really good months. So then you want to be able to balance that. Questions? Somebody has a question, I think I see.
No questions.
No, okay. What is a budget? Is the amount planned for ahead of time. Is the amount planned for ahead of time, and the actual is the amount that is realized. So you not only want to plan and set your budget, then you want to revise that budget once the whatever time period you have specified for that budget finalizes, and then you want to do another set of financials and you want to look at them and compare them to what the budget stated, okay, and see where tweaking is needed. What is an actual expense? Is the amount that was actually realized. Let's say, let's use for the sake of everybody knowing what it's all about, let's use WAPA. Let's say that for your electricity, you had expensed $3,000 for the first half of the year, let's say. And lo and behold, you end up paying $4,000 or $4,500. That is your actual expense, not what you budgeted for. So now you see that you have to do some tweaking. So how do you account for that extra money that was spent? Where did it come from? What Peter did you have to rob to pay Paul, so to speak? So these are the kind of things that you're gonna see when you review that budget with your actual financial statements. So the budget is the amount planned for ahead of time, and the actual is the amount that is realized. Okay, so auditing. Let's talk a little bit about auditing. Many people feel that auditing is a bad word. Not necessarily. We're going to learn that auditing is something that can be done internally by you can do your own auditing, or you can request other people to audit your company, and it can be at your request, not that somebody drops on you and say, oh, we're going to audit you. There, you will have that circumstance also, but we want to do things so that rarely, if ever, happens. But auditing in itself is not bad, it's not wrong. It can actually be healthy for your company. So we were going to discuss what an audit is, when and why you should audit, as well as what internal and external audits are. And I hope you've enjoyed learning this information, and make sure you find much use for it in the near future. It's important that you audit yourself, okay? It's just like a budget. It's going to tell you a lot about your business and where it is, compare where do you think it is. So it can be like two drastically different things. So it can be beneficial for you. What is an audit? The general definition of an audit is an evaluation of a person or system or a process. In business, an audit is an examination of the accumulation of financial records in order to determine if such records and/or financial statements are in accordance with the rules of generally accepted accounting principles, GAAP. So many people would say, who cares what generally accepted accounting principles are? Many people do. The IRS is one of them. So yes, we want to know what a generally accepted accounting principles are. And this is something that if you are a business person and you have a bookkeeper, you have an accountant. And we discussed previously what the difference between a bookkeeper and an accountant is. Both of them should know what the generally accepted accounting principles are, okay? Audited financial statements definition. Audited. Financial statements that bear the report of an independent auditors attesting to the financial statement's fairness and compliance with the generally accepted accounting principles. So it's not you telling the IRS or not you telling an investment company that is interested in maybe partnering with you. No, I do everything right. I know it. I do it by the book. No, they want to see someone else come in that has nothing to do with you, come in, take a look at your books and say, yes, he does everything by the book. Or yes, he is where he says he is. Or yes, this company is solid. You can go ahead and invest in it. So this is one of the things that audit does. And notice that it says the accumulation of financial records. So you need to have those financial records. If those records are not being kept, then you're not going to be able to have a good face. An audit, when they finish, it's like someone giving you building your resume for you, okay? And they're going to show in that resume everything good about you, but they're also going to show what is not so good. So you want that resume to look good. An auditor examines, collects evidence, and evaluates before making a judgment called an audit report. So once a CPA or an audit company is hired, then they have to give you a report at the end of that period of auditing. It has to be in writing. It has to be legally signed and attested to. And you have the right to agree or disagree with that report. And you have the right to contest it, okay? So that's something you need to know. Questions? Okay. I have to keep moving this little thing because it keeps being in the way. Why would you audit? Why would you want to do that? An effective audit helps organizations achieve goals and objectives by measuring overall performance and productivity, as detected in transactions and business records. Further, an audit protects an organization from financial misstatements, presenting a reliable, healthy picture of the organization to the markets. Again, don't always think me and my son and my cousin and that's it, that's my company. Always think that there is a time for growth, that there is a time when maybe you are going to have so much work that you're going to need to bring in somebody to work with you, or another company to bring in some money so that you can grow your company. So these audits help you, because if you're doing things the way you're supposed to be doing them, if you're keeping your records the way you're supposed to be keeping them, when they say we need to know how healthy your business is, you can say, okay, go ahead and audit, no problem. You feel secure, you know what you're doing. So this is what an audit can do for you. One of the things it can do for you. Fraud protection is another benefit of audits, because it can be achieved through internal controls that is going to prevent and detect accounting irregularities. Whew, sorry. If you have a company that you have grown to a certain extent, now you have different people overseeing different departments. Before it was you seeing everything, but now it's so big, it's so busy, you have different people overseeing these departments. It's very easy when things start growing very big for things to start being misplaced, for invoices or receipts to start being misplaced, and money also misplaced with that. An audit is going to help you to identify if that is something that is happening in your company. If you feel that it is, your best bet is to conduct an audit. Okay, hire someone to conduct an audit. Strengthening the financial integrity of an organization through an audit reduces risk and cost of capital. An audit provides investors and shareholders, or possible shareholders and investors, confidence by providing trusted information concerning financial statements and how well the organization is run. So you see how it's like a resume. It really talks a lot about the company. An audit inspects internal control system and ensures that ensuring whether they are sufficiently strong and working properly. In addition, an audit benefits accountants and tax collectors by addressing accounting problems and offering up-to-date information on techniques, rules, and regulations. So let's take our time right now with COVID. So many things have changed. So, I mean, it's like every day. I was listening to an SBA webinar by Mr. Huddleston just yesterday. And he gave it the day before, the 30th. And on the 30th, he said, okay, the PPP, the last day for it is March 31st. We think it's going to change, but we don't know it for sure. So I have to say March 31st. Boom, March 31st came, it changed to May 31st now, I think. So things change every day, and especially in the time that we're living in right now because of COVID, because of the impact that it has had in the economy, because of the assistance that is being generated by the federal government and the local governments. There are many things that are happening. And sometimes it's going to be hard for accountants to keep all those balls up in the air and know everything that is happening. So it could be that maybe they missed something. And an audit is going to bring that out, okay? And then you can have that conversation with your accountant. Finally, financial analysts use an audit to determine the value of an organization's shares. Again, if you are thinking of adding on shareholders or increasing, growing your company in any way, an audit is definitely something that you want to happen. So an internal audit is something that is done within the company. It improves operations. Now you notice that when we're saying audit, what is shown here is a computer. Yeah, that is something that can be audited. And especially if the person using the computer is someone that is reflecting, is the face of your company, you want to make sure that that is being done correctly. Or that computer is not being used in a way that could be even criminally, that can cause that person to be criminally judged, okay? And by default, your company. So you need to be aware of that. An external is an outside of the company. It's an independent entity that comes in and you don't want to be this person. You don't want to be the one that is trying to hide the skeletons in the closet or pushing the dirt under the rug, okay? Because believe me, this person here, this auditor, he's going to open those doors and he's going to look under the rug. This is what they do. That's what they're supposed to be doing. So try not to be that for your benefit. Okay, so what are the 4 phases of an audit cycle? So we have here 5, but we can condense it into 4, okay? You prepare for the audit. You select the criteria that is going to be audited. You measure levels of performance. You make whatever improvements are needed based on the results, and then you take whatever actions or project to take whatever actions are needed so that you can sustain those improvements. So let's see what is needed to prepare for the audit. Are there any questions? No, I just see the
Well,
flash.
the person said they can't see the slides. I can see the slides.
You can see it?
Yes, I see the presentation.
Okay.
So can you go reload the, exit out of the presentation and come back in and see if you can see the slides?
Exit out completely?
No, not you.
Okay, sorry.
The person that can't see them.
Yeah.
Sorry.
Okay, so how do we plan for an audit? How do we prepare for an audit? So you're planning everything that is done in advance by the interested parties, such as the auditor, the lead auditor, the client, and the audit program manager to ensure that the audit complies with the client's objective. This stage of an audit begins with the decision to conduct the audit and ends when the audit itself begins. So you don't say, okay, I'm going to do an audit and just call someone and come look at my books, take a look at my whole business, and dig up all my information and then tell me what you find. That's not the way you do an audit. If you're going to request an audit, especially if it's an internal audit, you're going to be very specific about what it is that is going to be audited, who are the persons that are going to be audited, who are the persons they're allowed to talk to, what are the things that they're allowed to look at, okay? And then they have to provide you with a report. And all of this has to be in black and white before the audit can begin. This is a contractual agreement and it's a legally binding agreement. So you cannot come in the middle of the audit and say, you know what, I wish you could also, audit this out of the department. That's a completely separate audit then. So think before you hire anyone to do that. Be specific about your wants, your needs, and your expectations. What is it that you expect to see as far as the information that you want them to look into and find out? Then you go into the audit execution is where the people are doing the actual field work, data gathering portion of the audit, and covers the time period from the arrival at the audit location to the exit meeting, okay? This can take anywhere from a week to a year, okay? It's all determined by what is audited and what they find during that audit, and how easy it is to talk to the people that are involved, how easy it is to get the documentation that is required. All of that is going to drive the time that the audit takes to be completed. It consists of multiple activities, including on-site audit, okay? On-site audit management, meeting with the auditee, understanding the process and system controls, and verifying that these controls work, communicating among team members, and communicating with the auditee. So something else, the auditor, the person who's going to come to do the audit, he first has to learn your business. He has to know what is it that makes your business work. So he's going to spend some time learning your business. And part of that may be talking to some of the people that are involved in the business to know what it is that they do, how they do it, how long does it take them to do it. All of this information is going to be very important for him when he starts the actual auditing of the paperwork and all of that, because he's going to have that background information to rely on. Audit reporting, the purpose of the audit report is to communicate the results of the investigation. The report should provide correct and clear data that will be effective as management aid in addressing important organizational issues. You requested an audit because you had a feeling that something was not right, or you just, if that was the case, you felt like something is not right, the numbers are not matching what you were expecting, and a department that you felt should have been doing really, really good is not doing really, really good. You requested that audit. Let's see what is happening. Okay, so then the report that is given to you should reflect all of that information, and it's going to address those important issues that you verbalize and put in contract when you first entered into the agreement. The audit process may end when the report is issued by the lead auditor or after follow-up actions are completed. So the auditor may have suggestions. Maybe this and this can be done, or maybe this person can be helped with the oversight of that department, you know, and maybe that is part of the contract. He's going to make suggestions. You're going to put those suggestions into work, and then you're going to he's going to come back and re-audit the company and see how well those things worked or didn't work. Okay. The audit is completed when all the planned audit activities have been carried out or otherwise agreed to with the audit client. Verification of follow-up actions may be part of a subsequent audit. So maybe he sees a lot of things that need to be done, and he makes suggestions, and you say, okay, let me work on that, and then I'll call you back next year, or I'll call you back in 3 months' time, or I'll call you back in 6 months' time. And then that would be a separate contract that you're going to enter. You're going to be looking at maybe other things or more things, and then it's going to be a whole different, you know, a different report, and everything is based on the new information that is obtained by that audit. So you prepare for the audit, you select the criteria that is going to be audited, you measure the level of performance. If suggestions are made, or if you can make those suggestions with your employees, you make them, and then you verify that those suggestions are being carried out and what is the result, and whether more improvements need to be made, or if things are working out the way that you expected. Okay, and you can see how an audit and a budget can work hand in hand, because once that audit is created, then you're setting new expectations. Then you have to revise your budget. Okay, that it goes hand in hand.
Excuse me, Carmen.
Uh-huh.
What slide are you on? Because several people are having challenges. I mean, what slide do you have up?
Let me see. I'll have to look in my slide on my presentation. Hold on.
Sorry about that.
No problem. Slide 16.
What's the title?
What are the 4 phases of an audit cycle?
Okay, that's not what I see. Slide 15, and some people don't see anything. So anybody that's having trouble, exit out and come back into the presentation. You can go ahead, Carmen.
Okay. Okay. Let me change this again. Okay. Internal Revenue Audit. That's the name that is a boogeyman for a lot of people. The Internal Revenue, I'm sorry? Hello? No? Okay. It's a review or an examination of an organization or an individual's account and financial information to ensure that the information reported is correct according to the tax laws, and to verify the reported amount of tax is correct. It can be an organization, it can be an individual, it could be a self-employed person, whichever one. Selection for an audit does not always suggest there is a problem. However,
excuse me, Carmen?
Yeah.
Could you unshare and reshare your screen, please?
Okay, no problem. Oh, here. Stop share. And reshare?
Yes, ma'am.
And I think it's here. from here. Okay.
Okay.
Is that better?
I think so. If you can see now, can you just raise your hands? You have the IRS slide up now?
Yes.
Okay.
Is that what everybody has?
Okay. People are saying they can see.
Okay. Most of the audits that the IRS makes are done by mail. Okay. Because before I start on it, because of COVID, there have been a lot of fraud being committed and a lot of fake companies stating that they are either the SBA, the FEMA, or the IRS, and they have been asking for information, personal information, critical information from people. And it sounds, everything looks like it is. IRS is not going to do that. They're not going to call you. IRS does not call you. They give you a number for you to call them, okay? They have all that information already. So the only thing that they might ask you is to give them the last of your four of your social security number, the last numbers of your social security number or your EIN number. That's it. So if you have someone that is calling you and they're telling you they are from the IRS and they need this and they need that, then you have the right to stop them. You have the right to ask them for an employee number. You have the right to ask them for a telephone number to contact them back. And you tell them, let me call you back. Give me your number. 9 out of 10, they're going to give you either a bogus number or you're never going to hear from them again. Okay. That is one way of knowing that this is a fake and this is someone that is trying to get at your money. So be careful. It's happening a lot now. FEMA is being impersonated. SBA is being impersonated. IRS is definitely being impersonated. The White House is being impersonated. So just because it looks like it's federal or it looks legal, don't accept that it is. Make sure that you always have a number that you can call and verify whether it is, okay? So just don't be giving your information out to any Tom, Dick, or Harry that calls you and says that they are a federal agent.
One
Okay.
quick question.
Mm-hmm.
When do you use an outside auditor and how often should you use them?
You use it when you need to, anytime that you need to audit, you should use, you should use an outside auditor, okay? You can use a CPA or there are firms. I don't know in St. Croix how that works, but I know that there are CPA firms in St. Croix that do internal auditing. And how often, again, it depends on your business. It depends on your needs. It depends on your concerns, okay? No one can tell you it has to be this amount of time or this many times or from here to there. It fitted to your business. Do you have concerns about what is happening in your business? Do you have concerns of money management in your business by those that have access to that money? Do an audit, do an internal audit. It'll cost you a little bit, but it's going to give you peace of mind. It's going to identify what areas there might be problems in, and it's going to allow you to sleep better at night. Because then you will take whatever actions, remedial action is necessary, and then you can, have a better night's sleep, so to speak. So you determine, the business owner determines, the shareholders, the company determines how often and what is being audited, okay? That's not a set rule as to how that's to be done. The IRS manages audits either by mail or through an in-person interview to review your records. Now, it could be the federal IRS or it can be the BIR, okay? They also have the right to audit you. The interview may be at the IRS office, which is not happening, or at the taxpayer's home, place of business, or accountant's office or field audit, or it might be through Zoom, as most things are being conducted nowadays for the sake of COVID. Remember, you will be contacted initially by mail. This is so important. Please remember this, okay? Don't let somebody call you and tell you that they're an IRS agent and give you a quick a whole heap of things that sound like it's federal, and then you're giving information to the wrong people. They're going to contact you by mail. The IRS will provide all contact information and instructions in the letter you're going to receive. They will provide you with a written request for the specific documents they want to see. They're also not going to tell you, open your whole life to me and let me see, you know, no. They have an issue, they only want to see what is with that issue that they are having. I'm taking this information directly from the IRS website, okay? At the bottom, you can see the IRS website that you can go into yourselves and get a lot, there's a lot more information under auditing that you can review, okay? If that ever happens to you, you can, knowledge is power. The more you know, the better you are at handling something, the better you are at making smart decisions. So if the IRS says they're going to audit you, they are not sent by God. They are not, you know, they are imperfect. They will make mistakes. So you have a right to question things. You have your rights. So go to the IRS website, familiarize yourself with what is in there. What are your rights as a business owner or as an individual, and then proceed with, you know, based on that information. How far back can the IRS go to audit my return? Generally, the IRS can include returns filed within the last 3 years in an audit. Now, last year I had the same presentation and Mary Jo reminded me that it depends on when you filed. Because if you filed 2016, which is 5 years back, if you file 2016 in 2020 or 2021, then they can start auditing you from 5 years back, okay? If they have questions with 2016. So it depends on when you file your last 3 years in an audit.
Can the audit cost be a business expense and or tax deductible?
Are we talking about an internal audit that you request? If it's that, yes, that's an expense, definitely.
And
yeah.
what about the cost of an external audit?
Whether it's internal or external, if you initiated it, it's a business expense.
Okay.
If it's something that IRS, there shouldn't be any expense from an IRS budget other than audit, other than they're going to tell you you owe us money. And that's a totally different type of expense. But if it's something you initiated, it's your expense as a company, yes. Yes.
Okay, great. Thank you.
How far back can the IRS, oh, we did that, okay. If saying we, because I took it directly from IRS, if IRS identifies a substantial error, they may add additional years. Then they're going to say, wait a minute, you were doing this 3 years back. Let's look at 3 years more and see how far back you were doing this. So be aware. They usually don't go back more than the last 6 years. So they say. How long does an audit take? The length varies depending on the type of audit, the complexity of the issues that are being audited, the availability of the information requested. Again, the availability of the information requested. So when an auditor comes, he's going to say, okay, I need to see this year, this and this and this and this report for that year. Then I need to see this other year, this and this report for the year. So how quickly do you get that information to that auditor is going to determine how quickly you're going to get the end result of that audit, okay? The availability of both parties for the scheduling of meetings and your agreement or disagreement with the findings, okay? So it can be lengthy, it can be quick. And the website there, irs.gov/business/small business or self-employed / I'm saying / I hope that's the correct terminology, IRS -audits number sign conduct, okay? So, or you can just go into irs.gov, hit audit, just type and search audit and it's going to inundate you with information, okay? Different types of audit. So we spoke about the internal audit. We discussed the external audit. We discussed about an IRS tax audit. but you can have a financial audit, an operational audit, compliance audit, information system audit, payroll audit, pay audit, okay? So these are all different types. Basically, you can audit a company for anything that you might feel merits that audit. Anything that you are feeling, either you want to make stand out, make look good, because you are trying to impress people who are going to put money into your business, or you have concerns about that particular department, you have concerns about that people, that management head, that is how they're dealing. So these are all good reasons for conducting an audit, okay? So audit is not a bad word, keep that in mind. So let's do some review questions. Audits are done in order to be in compliance with what or whom? To be in compliance with the GAAP, which is generally accepted accounting principles. Even if we don't give a fig for them, IRS does, and other people do, and we have to follow them, okay? What is a financial audit concerned with? Is, of course, concerned with your financial records, okay? As the name states, a financial audit is only concerned with the finances of a company. It seeks to uncover incidences of misstatement and or fraud. What does the IRS stand for? Not the Investigational Revenue System, even though it's not a bad name. It stands for the Internal Revenue System. And one of the functions of the Internal Revenue System may be to audit a company if it has just cause, or if it finds that it has just cause. What is the first part of the audit mentioned? The report title. The parts of the audit include, we said, report title, report address, the introductory paragraph, the scope paragraph. There is going to say, okay, this is what we're going to do. This is what we found. The opinion paragraph, based on our findings, this is what we think, this is what we feel should be done. And lastly, the signature of the CPA firm or the auditing company that is conducting the audit. And always keep in mind, you have the right to question that audit, okay? They have to give where they got that information, based on what are they making those assumptions, okay? What type of audit is conducted by someone in the company? Of course, that's called an internal audit. There are two types of audit, internal and external. Internal audits are conducted by someone from within the company or someone the company hires. External audits are conducted by third-party agencies such as the IRS or BIBIR. Or if you've just entered into an agreement with another company and they feel things are not going right, they can say, we want it to be audited. Who would conduct an internal audit for a company? It should be a certified internal auditor, okay? That carries weight. They are credentialed to perform this task. It's not just a matter of looking at paper and saying, oh, 5 minus 3 should be 2, and here it says that it's 3. No, that's not what we're talking about. We're talking about people that know, remember, the generally accepted accounting principles. They know how things should be on those books. They are trained specifically for this. So they have to be credentialed. And most accountants, most can do that. It's a special training though. Auditing is a special field that for an accountant that he would have to learn the rules for that. What type of audit is conducted by a third-party agency? That's called an external. Okay, we discussed this already. External audits are conducted by third-party agencies. How often is an external audit conducted? Periodically. It says here the periodical external audit is generally sufficient. It depends on your business. It depends on your concerns. It depends on what's happening with your business, and why that audit is required, okay? Is it because you're growing and you wanna be able to give assurances to future shareholders, or is it because you have concerns about what is happening inside your company? And some concerns will arise based on what you have budgeted and what the actuals are. Okay, that is one of the red flags that is going to maybe tell you, oops, I think we need to look a little bit more into this, okay? So they go hand in hand. So this is the end of the presentation. Any questions so far? No? We talked throughout the 5-part series, we talked about terminology in bookkeeping. We talked about what cash and accrual is, journal and ledgers, payroll, everything that goes with payroll, the reports, the forms that are needed to be completed by the employees, the reports that you have to do, whether on a quarterly or on a yearly basis. We talked about planning and budgeting and control auditing right now. Again, remember, all of this is being taped. You can go back and re-listen to it. You can, take your time. Hopefully, if those of you that missed, you're gonna have a copy of the PowerPoint presentation. But if you wanna see it and hear, everything that was talked over that, then just go back to the SBDC website and look it up. I think it's by the week's time, it's already up. By next week, it should be up, and you should be able to review it, okay, at your leisure. And if you have any questions, you can, my information is going to be at the end of the slides, and it's going to be part of the slides that you received, the PowerPoint. You can feel free to contact me. You can feel free to contact any SBDC business counselor. This is all information that they know, okay? They know this, so they should be able, and if they don't, SBDC has been kind enough to contract specialized people in specialized fields, such as myself in bookkeeping. They have accountants. So, and they have entered into these contracts so that they can have them available to help you as a business owner. Make use of these resources, please. These are free resources to you. Make use of them.
Question.
Mm-hmm.
Can you provide bonus pay to an auditor as an incentive to ensure the auditor is sincere?
No, what that says is that he's not sincere because he's going to be on your favor. No, that's a big no-no.
That sounds like a bribe.
Yes, exactly. That's how it's going to be looked at, whether it was or not, between you and God. But yeah, no. Any good auditor will tell you no anyway, because it could cost him his license or whatever, his reputation, definitely. So no.
Okay.
No. That's the whole reason of hiring somebody from the outside, is so that they don't have any gains or losses in how the information comes out. They're just going to present the information. But if they have some kind of pull on it, then they're going to present it in a way that benefits whomever side he's on. No, okay. It's not to your benefit. Oops, we have a poll question up.
Well, I was going to put up the other couple of poll questions.
Oh, we're not finished though. We haven't finished reviewing. Okay. Sorry. Okay, so these are some of the things that we spoke about. I don't know if I can. Yeah, I can. These are some of the things that we discussed. These are some of the terminologies that were considered, and we talked at length about what each of these mean and represent. So again, I urge you that if you didn't do the whole series, you can go back and do them at your leisure, okay? And in wrap up, although this workshop is coming to a close, I hope that your journey to improve your basic bookkeeping skills is just the beginning. If you are not the bookkeeper, you are the business owner, then you want to share this information with your bookkeeper. You want to make sure that you are up to date in what your bookkeeper is supposed to provide you, and that you have those conversations with your bookkeeper, okay? Keep abreast of your business, bookkeeping and record keeping. Don't say, oh, the bookkeeper should know. Yes, she should know, and he or she should know, and that's their job, but you also, it's your business, it's not their business. Keep that in mind. Ask for financial statements so you can budget and plan for your business future by making informed decisions. Don't leave the success of your business to chance. Conduct internal audits so you have a clear picture of what is happening in your company and where you're headed. Ask your bookkeeper or your accountant questions, and more questions. We are supposed to be able to provide those answers, and if not, look for them, okay? That's what you're paying us for. So yes, you have the right to ask questions. May your business be successful, continue to grow, and have a long life. I hope you enjoyed the series. I hope that you got something out of it, that it was beneficial to you in any way. I hope a big way, but even if at least a small way, I would be happy with that. And like I said before, I would like to ask you, if you can, in the comments, in the chat, to leave, just tell me what one thing you got out of the presentation that kind of resonated with you, or you felt that you really are happy that you heard it, so that I can, you know, if I ever do this again, that we can continue improving in our presentations, okay? I wish you the best, and you have holidays coming up. Stay safe, wear your mask, be loving to yourself and to others, and enjoy a happy holiday and weekend, okay? See ya.
Okay, now I can ask my poll question.
Now you can answer questions.
Okay, and the question that's up, and I'm going to go ahead and end the poll because it's been there for a while. Did you attend any of the previous webinars in the series? And 80% of the people attended understanding basic terminology. 100% of the attendees here that answered the poll attended accounting methods, keeping track of your business. 100% that answered the poll, understanding the balance and other understanding the balance sheet and other financial statements. And 80% that answered the poll attended the payroll, accounting, and terminology in the period procedures. So that's pretty good.
That's pretty good, yeah.
And there's one more poll, two more poll questions. And in terms of this webinar, what was the level of the presentation? Was it too easy? Was it just right? Was it too difficult? And we'll leave that up for a couple of seconds. And in the interim, I will prepare to send you the final bookkeeping presentation. And the final bookkeeping presentation is in the chat, so you guys can download that. And I will end the poll. And in ending the poll, 100% of those that answered said it was just right.
Thank you. I'm happy to hear that. I still want to hear what you think about it, or what resonated with you, okay? So please put that in the chat. Wonderful. I'm really happy about that. Now, where are you located?
And that poll just went up. Are you on St. Croix, St. John, St. Thomas, Water Island, Puerto Rico, or other? Now, we had several people that were on Facebook. Unfortunately, because they're on Facebook, they don't get to answer the poll questions. All right, and I will end the poll in 3 seconds. 3, 2, 1, 0. 40% of the people that answered the poll were on St. Croix.
Nice.
50% were on St. Thomas, and 10% were other.
Nice, very good. Wonderful. Happy to hear that.
Oh, okay. Somebody wants a certificate for attending all the sessions. We'll go back and check. We'll go back and check our attendance roll.
Okay, that's a good suggestion.
That's a good suggestion. Oh, there's a question. What is cost of goods sold?
Cost of goods sold. We talked about that in, I think, let me see.
Definitely under terminology.
Under terminology, yeah, but after that, I think it was the second or the third, we spoke of it. Cost of goods sold, basically, say you are retailer. Say that you have a shop and you're selling clothes. Okay, so the clothes cost you a certain amount of money, but that was not the only thing that they cost you. You had to bring those clothes over here, whether by airmail or by shipping, okay? So shipping and handling is a cost of goods sold, okay? You had to truck it to your business, okay? That's also a cost of goods sold. Whatever additional to the, if you paid for one thing, the price set for that particular item, whatever additional expenses you have to be able to then resell that item or provide it as a service in a company, those are cost of goods sold, okay? And so it's important that you know what costs of goods sold you have, because when you are going to price that item for resale, you need to include a percentage of that so that you can make back your money. You don't want to buy something for, say, $5 and you say, wow, I got a really good deal. I can sell it for $8, $10. Whoop, I'm making a whole bunch of money. No, but you didn't remember that you paid to have it sent over here. Then you paid excise tax. Then you pay someone to pick it up and bring it to you. All of those added costs you want to incorporate into what you're going to be charging for that, a percentage of those costs you want to include so that you can recuperate your money and still make a little bit over that or more, okay? So it's an important part of your business equation, and you have to be knowledgeable of what those are. You don't know what those are? Sit down with your accountant and have your accountant explain to you for your particular business. I'm talking retail because that's the easiest way of explaining it, but other businesses have other cost of goods sold. So have your accountant explain to you what would be considered the cost of goods sold for your particular business. That's a good conversation to have with your accountant. Anything else?
I don't know if you wanted to hear some of the takeaways, but
sure.
The one that's near and dear to my heart is the one that says the importance of record keeping. That's key for any business.
Yes. Yes.
If you don't do that right,
yes,
nothing else really matters.
Nothing. Remember, we talked about the financial statements being a snapshot of your company. Okay, it's another resume. I like to say resume because a resume, when you're giving a resume to someone, you always try to put yourself as pretty and as, you know, as knowledgeable and as good as possible. So these financial statements also do that for you. They can either say how good you're running your business or they can say how bad you are running your business. So keep that in mind. And for those financial statements to be accurate, then you have to keep records. Your bookkeeper has to know what they're doing. They have to know what is the cost of goods sold for your particular business. They need to know what is an expense, what is a liability, what is income, what is not income, but it's still money coming in. All of that they need to know, okay? So that it's reflected and the resume that you're giving of your company is a good one. Definitely. I'm happy that you brought that up.
And can you put up your exit slide, please? We're just a little over time.
Oh, see. Oh, sorry.
That's okay. But for those that want to hang on, we can go a few more minutes.
Okay.
Okay. Another person learned the importance of conducting an audit, maintaining receipts, and reconciling statements. Reconciliation.
Very important. Extremely important. For, again, reconciliation important for those financial statements to be accurate. You pick up a lot of mistakes sometimes during reconciliations.
Okay.
Good. I'm happy to hear that.
Yes. All right. Well, the last session has been fun. And all of the sessions have been very informative. And on behalf of the State Director of the Virgin Islands Small Business Development Center, Mr. Ted Gutierrez, and the staff on St. Croix and St. Thomas, we want to thank you, Ms. Carmen Acevedo Adams, for your presentations, but we also want to thank the audience for attending.
Yes.
Oh, somebody wants another session after this?
What would you call it?
we call it register with the SBDC to get one-on-one counseling.
Oh.
The importance of budget, another good takeaway. So, well, we want to thank you all for attending. And next week we have Wayne Huddleston on Tuesday doing a presentation on getting a business loan and the 5 C's of credit. On Wednesday, we have Mark Wilson back on the disaster recovery. And on Thursday, we have government contracting. And we're going to have the tips, strategies, and best practices of doing business with the local and the federal government. And we don't have Carmen on Thursday afternoon. But anyway, that we have a full week for next week. And on yes. So we want to thank you all again for joining us. We look forward to seeing you next week. Register on Facebook, register on the VISBDC webpage, and have a good holiday weekend.
Be safe. Bye.
Hey, Carmen, it's just the three of us. It's just the three of us. Yay.